Every time your phone streams a video, loads a map, sends a message, or connects to 5G, there is infrastructure behind that signal, and someone owns that infrastructure. That is where American Tower, ticker AMT, becomes interesting. American Tower is not a wireless carrier. It does not sell you a phone plan. It owns and operates the real assets that help wireless networks function: cell towers, communication sites, digital infrastructure. And now, through data centers, it also has exposure to cloud and AI-related demand. But this is not a simple everyone uses phones, so buy the stock story. AMT is still a REIT. That means investors need to understand AFFO, debt, interest rates, churn, international exposure, dividends, and valuation. American Tower is a digital infrastructure REIT. The simplest way to understand it is this: wireless carriers need places to put equipment. American Tower owns or operates many of those tower sites and communication locations. The carriers lease space. American Tower collects rent. And because multiple tenants can use the same tower, the economics can become very attractive when the asset is well located. But AMT is not only a cell tower story anymore. The company also has a data center business through CoreSite. That gives it exposure to cloud, interconnection, enterprise data demand, and AI-related workloads. So when investors look at American Tower, they are not just looking at a phone tower company. They are looking at a digital infrastructure REIT. But before we talk about American Tower makes money through infrastructure leases. The company owns or operates sites. Wireless carriers lease space on those sites. American Tower collects recurring rent, and over time, the company can grow revenue through escalators, additional tenants, equipment upgrades, and demand for more network capacity. This is why cell towers can be powerful assets. One tower can support multiple tenants, and once the tower is built, adding another tenant can improve the economics of that site. That is operating leverage. The tower is the asset, the lease is the engine. But investors should not stop at the simple story. The quality of the leases matters, the tenants matter, churn matters, debt matters, and AFFO matters. So the business model can be attractive, but only if the cash flow is durable. Now let's connect that model to why cell towers still matter because mobile data keeps becoming more important. People stream more video, use more apps, rely on maps, payments, messaging, work tools, social media, and cloud services. Businesses rely on connected devices, and 5G networks need strong infrastructure to support higher data usage. This is the basic demand story behind American Tower. More digital activity usually means more network demand, and network demand usually requires physical infrastructure. But there is one important warning. More data usage does not automatically mean unlimited shareholder returns. American Tower still needs to convert that demand into leasing revenue, AFFO growth, and attractive returns on capital. So the demand story. American Tower is not only a cell tower REIT. Through CoreSite, it also has a data center platform. That matters because data centers are part of the infrastructure behind cloud computing, hybrid cloud, interconnection, enterprise data, and AI workloads. AI may sound like software, but AI still needs physical infrastructure. It needs data centers. It needs power. It needs network connections. It needs capital. And that gives AMT another layer of digital infrastructure exposure. For 2026, American Tower's outlook includes data center property revenue of roughly $1.175 to $1.195 billion. That is meaningful. But investors need to stay. In the first quarter of 2026, American Tower reported revenue of $2.738 billion. Property revenue was $2.67 billion. Adjusted EBITDA was $1.835 billion. AFFO was $1.324 billion, and AFFO per share was $2.84. These numbers matter because they connect the digital infrastructure story to the actual business. For a REIT, the story has to show up in AFFO. AFFO helps investors understand the cash flow that can support dividends, debt management, reinvestment, and long-term value creation. So if American Tower is benefiting from wireless infrastructure, mobile data, data centers, and digital demand, investors should eventually see that in AFFO. But one quarter is only. For full year 2026, American Tower's outlook gives investors a map of management's expectations. The company guided for property revenue between $10.585 billion and $10.735 billion. Adjusted EBITDA between $7.195 billion and $7.265 billion, and AFFO between $5.09 billion and $5.17 billion, and AFFO per share between $10.90 and $11.07. That guidance helps frame the year, but guidance is not a promise. It is a current estimate based on what management sees today. Economic conditions can change. Carrier spending can change. Interest rates can change. The first major risk is carrier churn and customer behavior. American Tower depends heavily on wireless carriers and communication customers. That means lease contracts matter, tenant billings matter, escalators matter, renewals matter, and churn matters. The signal may be essential, but the contracts still drive cash flow. If carriers consolidate, reduce spending, cancel leases, delay network upgrades, or renegotiate terms, that can affect growth. This is why investors should not look at cell towers and assume the business is automatically risk-free. Yes, the infrastructure is important. Yes, mobile data is growing, but the cash flow still depends on real contracts with real customers making real network decisions. So AMT has attractive assets, but those assets need strong tenant demand. The second risk is even broader. Interest rates matter for American Tower because REITs are capital-intensive businesses. They use capital to maintain assets, refinance debt, invest in growth, and sometimes acquire or develop new infrastructure. When capital is cheap, growth can be easier. When capital becomes expensive, the math gets harder. Higher rates can affect debt costs. They can pressure valuation. They can make dividends look less attractive compared with treasuries. And they can reduce the appeal of long-duration infrastructure cash flows. This does not mean AMT is weak. It means investors need to respect the balance sheet. Great assets can still struggle if capital becomes expensive. That is why price, debt, refinancing, and capital allocation all matter. And because American Tower operates globally, there is another layer of complexity: international exposure and currency. American Tower is a global company. That can be a strength. Global exposure can give the company access to more markets, more mobile data growth, and more geographic diversification. But global growth also adds complexity. Currency can move against the company. Regulations can change. Local inflation can pressure costs. Political risk can increase uncertainty. And wireless carriers in different countries may have very different financial strength. So international exposure is not automatically good or bad. It is a trade-off. More markets can create more growth opportunities, but more markets can also create more moving parts. That is why investors need to analyze AMT as more than just a U.S. tower REIT. It is a global digital infrastructure business. And before we move into valuation, this is the right point. This is the kind of no-hype REIT analysis we focus on at Boring Money Wins. Not just saying cell towers are essential, not just buying a stock because everyone uses a phone, and not ignoring debt, churn, interest rates, currency, AFFO, or valuation. We look at the business, the cash flow, the risks, and the price. If this kind of investing breakdown is useful, hit the like button and subscribe to the channel. It helps the channel grow, and it tells YouTube to show more practical investing content to people who want clear analysis instead of noise. Now that we understand the business and the main risks, we need to ask the most important investment. Price still matters. American Tower can own essential infrastructure and still be a bad investment if bought at the wrong valuation. That is one of the most important investing lessons. Investors should look at price to AFFO, dividend yield, AFFO per share growth, debt levels, payout ratio, interest rates, and capital allocation. The phrase digital infrastructure sounds powerful, but powerful assets do not remove valuation risk. If investors pay too much, future returns can disappoint even if the business remains strong. So the right question is not only whether AMT is a quality REIT, the right question is whether the expected AFFO growth, dividend profile, balance sheet, and risks justify the price. American Tower is a different REIT bet from many other names. It is not the same as Realty Income. Realty Income is more focused on net lease income and monthly dividends. It is not the same as Simon Property Group. Simon is tied to premium retail real estate. It is not the same as Prologis. Prologis is more about logistics, e-commerce, supply chains, and industrial real estate. American Tower is a digital infrastructure REIT. Cell towers, communication sites, mobile data, 5G, and data centers. That makes AMT interesting, but also different. It is not a bond substitute. It is not just a simple income vehicle. It is a real estate business tied to digital infrastructure, capital costs, tenant behavior, and long-term connectivity demand. So who might actually want this kind of investment? American Tower may appeal to investors who want exposure to digital infrastructure. It may also appeal to investors who believe mobile data, 5G, cloud usage, and connected devices will keep growing over time. It may fit investors who understand REIT growth and are willing to analyze AFFO, debt, and valuation. But some investors should be careful. If you're only chasing yield, AMT may not be the best fit. If you think cell towers are risk-free, that is a mistake. If you ignore debt and interest rates, you may miss a major part of the thesis. If you expect bond-like safety, so is American Tower worth studying in 2026? Yes. AMT is one of the most important digital infrastructure REITs in the market. Cell towers still matter. Mobile data still matters. 5G still needs infrastructure, and data centers add another layer connected to cloud and AI workloads. But this is not a stock to buy blindly just because everyone uses a phone. Investors need to analyze AFFO, debt, interest rates, churn, international exposure, currency, dividends, and valuation. American Tower may make sense for investors who want digital infrastructure exposure and understand the risks, but the best infrastructure investment is not the one with the best story. It is the one where the cash flow survives.